Hello everyone, today is Tuesday around 9 p.m. New York time on November 22nd, and we're going to go with the daily technical video day. Guys, we're going to start with what it looks to be the most clear structure in the market. Okay, in this market we have everything at this stage. We have a pair like the New Zealand dollar that makes a new low before the October the 2nd low right here on the dollar. And then we have a pair like cable, which been very strong compared to the rest of the pairs. What I say is that most of the pairs they're running even, either to the new low like the New Zealand, or they are about the 76.4% of the retracement or the move from October the 2nd to the 30, and cable is sitting at the 618. Now, why do we say that cable is the most clear structure in the market? Only because of the reason that the way a structure is well defined, is overlapping, it have a good relationship between the fibers, and the imports and the RSI are well defined. Now, what cable is showing? Cable is showing a 5, a 3, and a 5, a 3, a 5, a 3, and another 5. According to the cable chart, don't get surprised to see another low. I would say that it's almost sure that we're gonna get another low in cable, but after we ended that low in cable, what we're gonna have? 1, 2, 3, 4, 5, 6, 7 swing. That means the case in cable for a corrective structure and at least a recovery to the area around the 160 area minimum should cable recover right there. Now, I would say minimum. Why? Because I gotta be honest with you guys. As a human beings, sometimes we tend to overreact to the news. We tend to overreact to the move, and I was thinking myself that one of the reasons that most of the traders, including us, sometimes we end up losing the move, even when we know that the move are gonna take place, is because we react to the short time move. In other words, let's put an example. When the euro was trading at 131.50, Elliott Wave forecast was calling for a bounce, and we knew that we're gonna have the biggest bounce in the whole summer. And we've been saying the videos right there. Why do we miss it? Because we try to catch the move, and then we give up. Why we give up? Because we saw the move, the euro going lower and lower, and then I draw that conclusion that sometimes that's what is working against traders, is that sometimes we tend to overreact to the move that is happening on the market right now, and we forget about the tools that make us identify that move is going to take place. Now, if we take a look to the move at the 131 in the euro, is the same scenario that is taking place right now. Same scenario, a big move in favor of the dollar, but the move is lacking momentum. The move is showing a corrected structure, and I feel confident to say this. This is not a move in the dollar. That the move can stand correctly after 3 point back, I agree. But this is not the famous wave 3 of 3 that everyone is calling in the dollar. Now, I've been saying all this is because of this. It's because cable, look, we entered this drop in cable thinking that cable is going to do a B wave within the E wave. Now, my question to everyone right here, what have happened to deny that scenario? That's my question. What have happened to deny that scenario? The answer, nothing. Cable have done exactly what we were expecting, which is a corrected decline against this this recovery. If you take a look time-wise, cable, it took, this is a 480 chart, so took 59 cycles to go from 152 to 161, 1,000 picks, and now have take 53 cycles to decline almost 618 of that time. So technically speaking, the time is telling you that the move to the outside is more powerful. So why question, or why believe that the world's going to come to the end when the charts are not saying that? I don't want to be a contrarian. I don't want to be the one that say it's not happening. Yes, the dollar has got strong. Yes, and admit it. And we are even calling for another leg or strength in the dollar. But to be honest with you guys, I don't see a reason why this have to be the crash that the world is calling. I don't see it. To be honest with you, I don't see it. At this stage, I don't see it. I see a lot of lack of momentum, and I see a lot of things that is negating that scenario. Now, for cable, very clear. It's going to bounce, I would say, for around 155 area, should bounce. On the short time frame in cable, also a very clear structure when the RSI is showing everything. Look, guys. The RSI, for the new guys, look, 5 ways a cycle, 5 ways another cycle. So for those guys that trade cable, don't be afraid to buy cable after the new low. Don't be afraid, guys. You paying a subscription that is like a subscription that do not have a bias. A subscription that when it's telling you guys most of the time that this is a trap, is a trap. Don't be afraid. Don't be afraid. I'm the first one to admit it and say, I'm doing this and give you my trade sometimes. Don't be afraid. Trust the knowledge. Trust the indicators that you use to trade. Trust Elliott Wave. Elliott Wave is not showing a wave 3 of 3 in any pair. Not a single one. Elliott Wave is showing a wave 3 of 3 coming to the market. That's my humble opinion, and I can prove it. Other than the S&P cash, I don't see nothing important in the market, in my humble opinion. Now, that the decline can stand in a corrective wave, yes, I agree. But the crash, this is not a crash. So getting back to the charts, I believe that cable is looking for 155 area and should bounce to at least to 160. Now, let's go pretty fast. About the pairs. Let's start with the euro here. The euro, I would say, guys, 2 scenarios. Either this is the wave 4 triangle as it is presented here. Either this is the wave 4 triangle as it's presented. If it's a triangle, you have A, B, C, probably in the E, the market is going to get back to 150, 35, 30, and then the market is going to drop. The triangle makes a lot of sense. We see structures during that day like the dollar CAD, like Aussie, even cable, New Zealand, that they only allow one more low, most likely. That's telling me that the triangle can be the one in place. Now, this is the thing. If the euro is trusting for the triangle, guess what, guys? I feel confident after seeing 5 ways out of the lows to call the move in the euro that it can go about 144 easily. Now, not right now. Right now, I'm not saying that. Right now, what I'm saying is that after the triangle, fade the low. Don't be afraid. Fade the low after the triangle. Triangles are 10-minute move. And the low around 130 should be bought because the minimum is a move to 139, 140. Don't be afraid to make money. Fade the low right there if the triangle is the one in place in the euro. Otherwise, if it's not a triangle, then the euro is going to do A, B, and C. And then we're going to go to the scenario that is most supported by the dollar in some degrees, but also is the one that we've been covering all around the week, when the euro is doing a double zigzag structure from the top. Like we've been very clear about it. It is A, B, C, W, A, S, A, and B. Now, the next, yes, possible. I don't deny that. I don't deny that only seeing an structure. Now, but in the RSI, I'm sorry, I need to see in the RSI I got 1, 2, 1, and I need to see if the next is the one in place. I need to see how this thing is going to react when it goes higher, because the next is going to require a move out of this trend line to at least 136.80, 136.50 area, 36.20, and then I want to see the RSI. Now, like I say, and I prove it to you guys today, wave 1 or wave 3 is going to erase whatever divergence is created for the wave 1. In other words, if you're going to call this the top, this is a wave 1, right? Let's start with it that there is no divergence. And then if that's the case, and then you have wave 2, this move right here, this move should have erased this divergence in wave 1 of 3 is in place. That's all I can say about it. Now, another pairs that I want to show, I don't want to get into too much details like that, because anyway, we have been talking about it all week. It's like pairs like the Aussie dollar. When you guys can see in the RSI a huge divergence. That's not a wave 3, guys. That's corrective, in my opinion. That it can drop, yeah, always can drop. But that do not mean that it have to be impulsive. It can drop in a double zigzag, triple zigzag, and it been dropping. But again, that's why we still believe that every 3 ways back should be bought in the dollar on to prove you wrong. Now, we believe that another low is going to take place in the dollar before any type of recovery. Another low, another high should be taking place before the dollar recovery. Before the dollar is being sold. Now, let's move on to the euro pound. The euro pound, it can be done. I don't deny that. We're waiting for the euro pound at 87. We see a very nice right here, 1, 2, 1, 2, and we're spreading another high. We see from the lows, from here, if you go like in a 1 hour, you can notice that we have 1, 2, 3, 4, 5, 6, 7 swings. 7 swings, they are no impulsive. So we need an A that was taking place, and the 9 to compress the impulsive. So that's what we like about the euro pound. I'm selling around 79. Now, S&P, what I can tell you guys, S&P, it is very tricky at the best. The cash, which is the most reliable above, looks impulsive from here. I cannot deny that. And even from here looks impulsive. But having said that, it looks impulsive from here, but this is not an impulse in the cash. which make the wave count even more compressed, because only a triangle B wave, something like this, can make the case, or a truncation in C. I don't like the truncation in C only because of the fact that on the RSI, this leg, it didn't went above the A wave, which is right here, which reads 7014. This one reads 62. I don't like the truncation. So I will have to say this. Maybe on the S&P what we have is 1, 2, and then 1, 2, 3, 4, 5, a 4, and all we need in the S&P is another low to complete the C wave, and then who knows if the S&P turn bullish from there. Now, if it's gonna go lower, there will be no more a scenario that call this a truncation. I don't like it, but well, it's not. Is what the price action is dictated. Besides that, I was checking that in the first leg, I got 1, 2, 3, 4, 5, 6, 7 swing also here. So maybe this is WS, and then we have a B, or something, a B wave triangle, something like here, and lower. But again, this divergence in the S&P is not looking good for the bears. So let's see how it plays out. And we're going to know very soon, like me and DV, we were talking. We're going to know very soon how the things is going to play out. Now, gold has been very, very well behaving. Remember, don't fall in love with the 5 ways in gold, because gold, as you guys know, is in the wave 4, and wave 4 can take any type of Elliott wave structure. Can be a flat. Well, flat, it have to be the 5 ways. Can be a triangle. We can be right now in the B wave of a flat. Nobody knows. So don't get too excited chasing wave 5s and gold, because you guys can get burned out right there. As of right now, we're running the 5 ways on to prove you wrong. The trade right now in gold is selling at 1711 against 1736. All right. Let me see what else. The EuroCAD. One second. The EuroCAD also is showing a very nice move from the lows. I mean, it looks like from the lows, it got 1, 2, 1, 2, 3, 4. And remember that we were saying that around 137.50, this pair was a buy. There you go, guys. It's trading 250 picks or 300 picks higher. So, in general, guys, nothing has changed. We're still expecting one more high on the dollar to complete a 7-way swing. The momentum divergence that we are observing in the dollar only can be erased with a huge move to the outside. Now, we don't recommend fading the dollar. What we recommended to you guys is wait for us to let you guys know that the top is in place. A drop in the dollar is expecting either corrective of impulse, and not only that, if you see a triangle taking place like it is taking place on the euro, if the triangle is the one in place, don't be afraid to fade the move out of the triangle. That's very important that you guys understand. Now, let's move on. Finally, let's take a look at the dollar as an index. The dollar as an index is showing an enormous divergence on momentum. And like we've been saying all over, there is 5 swing on the dollar and maybe a triangle at the end of the last leg. It looks like a wedgie, and the wedgie tends to drop to the downside. Now, if the move is to the outside, like I've been saying, don't fade the dollar. Only fade if you see a triangle. But we believe that the dollar still got more outside before any type of retracement. I mean, it got a solid another high. Look, right here, it is very possible that the dollar can be doing like a type. If you take a look here, 1, 2, 3, 4, 5 to end the move. So technically speaking, this can be like a C-way diagonal. Now, taking a look at the 8 hour, this is how it looks. It looks like A, B, I'm sorry, 1, 2, 3, 4, 5, 6, and you guys see we are right here in the 7 swings coming in. Now, this looks very, contracting here. We can be in the presence of the triangle, but again, what it matters is this, guys. What it matters is this. Look, the momentum, the lacking momentum right here. Now, only a move, and a strong move, and a break of this trend line to the outside with authority, we determine that for real, the dollar is on the move. Remember, the dollar do not need to be, the recovering in the dollar do not need to be in 5 ways. The dollar can make A, B, C, W, S, A, B, C, Y, make 3 backs, and from here going higher. The dollar is not the case in cable. Cable is more clear. The dollar can be in anything. All I know is this: buying the dollar here, thinking on a swing trade, is very risky, right? So let's leave it there. Let's see how it play out. The holidays, the Thanksgiving holidays, is very soon. It's on Thursday, but don't fool yourself because of the holiday. I have seen many strong moves during those holidays. Thank you, and have everyone a good night. Thanks.